Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, December 16th, 2025. It's 12:23 p.m. Eastern Time, so I'm starting the video, so about a true midday mid-session update. I don't have anything special. I'm as I think I've already mentioned you guys, I'm not going anywhere this Christmas vacation. I do have my kids home from college. Taking some time with them, and I'm in quasi vacation mode, meaning I'm at home, but not at my desk all day. Like I said, December, historically, that time between Christmas and New Year's is just not been a profitable trading period. Volumes drop off. A lot of folks on vacation. That leads to increased whipsaws. That means false breakouts, buy signals, and the likes. Now, with that being said, I check in. I'm looking at the markets every day. If I see an opportunity, I'm going to get it out to you. But again, with that being said, expecting posts to be on the light side. I did get back to any of the questions or comments that I saw. I made some replies today. You can always go back and check the last few days. There's some chart requests, a couple things there I won't go over now. Again, you can come into the site and look at those comments if you want. Let me do this. In this video, we'll do an update on the equity markets, which along with the VIX, which is closely related, and the semiconductors. I think one of the most important sectors, a key subsector of technology. Then on a somewhat related note, TLT Treasury bonds. I'll get to some of the commodities I've been covering, especially I wanted to do an update on natural gas. I did get an update out to you by post today, but I want to share my thoughts there. And then a handful of individual stock trade idea, really updates and even a new potential setup on some of the airline stocks. So again, in that order, let's just jump through here. This is the broadening wedge pattern I told you I recently highlighted or recognized in both the S&P 500 as well as the Wilshire 5000 VTI, really the stock market. So just like back here, a broadening wedge pattern is also known as a megaphone pattern, takes that shape. You need at least 3 touches on one side and 2 on the other, and that's what we have here. So this is a megaphone pattern similar to the one we had back here. And as I shared with you recently, there's a strategy known as a partial rise. And that is once you have the fully mature, again, but the criteria I just mentioned, at least 3 touches on one side, 2 on the other, then you look for a partial rise into the megaphone pattern towards the top, and you wait to see about at this sweet spot, about a halfway, anywhere halfway, 2/3 of the way up. And then you want to see the reversal take place. Otherwise, you're going up. You could keep going up. So we do. That's what happened here, and it certainly marked the top there. And again, this is almost identical pattern. So I told you last week you could take a short position there if you didn't already have one, and put a stop. Again, somewhat is going to be relative to your price target or targets. Everybody's different. Some people are just looking for quick pullback trades. Others might be looking for a more significant top or even the top. So that's up to you. VTI is again the closest thing to the entire stock market. That's what it attempts to track. Unlike SPY, which is the S&P 500 tracking ETF, those are the 500 largest U.S. companies. This is the entire stock market, large, mega caps, small caps, mid caps, micro caps, and again everything. And so it kind of gives you a view of the overall. Again, the best view if you can of a single ETF, giving you an overview of the entire stock market. And the same thing, it had an almost identical. It's going to marry the S&P 500 or mirror the S&P 500 very closely. And that was the last partial rise, well by the top, and so far so good. So that's that hard stop. Either plays out or not. Again, your stops will be commensurate with your targets. If you're new to the site, I have laid out for a while now some long-term targets based on the weekly chart for both SPY and QQQ. Let's see, okay, board 8 here. And it's really continuation play of the top that we had back here last year. We hit my third of 7 total targets in the S&P, but at that point, for the reasons stated at the time, it was a good time to cover all shorts and go full long And so it's, again, I view it as a continuation trade. And those are still the longer term targets. SPY isn't really my go-to trading proxy. QQQ is. This is the one I put the most effort into, and will typically trade when trading the indexes unless I'm favoring the small caps, or sometimes I'll trade both. And same thing. So we hit T3 back at the key April lows, had a marginal, still divergent high. And so what I did, since these targets were already checked and that was a cover and reverse situation, I laid out some new targets with picking up the previous targets are still that. That was T3. T3 was already hit. It's been checked. So my belief is if we get anywhere close to it, we could certainly have another reaction. In fact, I'd probably expect one, but wouldn't bank on it because it's already been, we had a check mark there. That's how, in my head, these things work. When a target is hit, it's been checked. And that increases the odds the next time you go down there, whether you bounce off it again, maybe 2-3 more times, ultimately that will give way and you'll go down to the next target or targets. So there's T7 calling for a total drop. Making, taking the liberty to make the assumption that high from the end of October was the top, and if so, that's going to be a drop of about 58% in the NASDAQ 100. But again, a lot of work to be done, guys. That's just a potential top. There's still that bearish engulfing candlestick. Remember, on the weekly, it's still intact, still proving to be the top. We'll see if it only time will tell. But as I've been saying repeatedly, for months now, in total, unless these October lows are taken out with conviction. That's the October 10th low. This is a weekly chart. You can see it on the daily, even better. Then that's not going to happen, right? I mean, obviously that makes sense. It's only logical that you're not going to go down here without taking this level out. But again, it's a level I think it has a lot of technical significance. When taken out, then the next step will be the 200-day moving averages and this T2 level here, which you have on a QQQ daily chart. Again, this is a shorter term, a more recent swing trade from this breakdown. We had multiple sell signals in the last few couple months here. We hit that first target, bounced. Again, you never go down. A trend is never from a straight move from point A to point B. There's always counter trend moves, and that's why I list multiple targets. So again, so that's kind of near term. I'm still leaning that way, but as I said, it is the holiday season. We have the seasonality, the potential Santa rally. So far, Santa rally is not really materializing, right? This is a month of December, and we've been going down lately. Now, Santa has plenty of time to come if he wants. But I don't trade based on seasonality. What happens when you bank too much there? Yes, there's if you go back far enough in time, they'll tell you this is a historically bullish season. But there are most certainly periods in December. Last year was a great example. We did nothing but go down the month of September, and we had a nice move up in the VIX. So let me get to the VIX. Again, I just want to show you, technically speaking, really no change in the outlook other than the fact that this is just a good time to take off. I don't see any fireworks happening. If the October 10th lows do get taken out, yeah, then it might be time to engage the market a little more aggressively. Until then, this is a grind. Recognize it for what it is. If you're not making money on the indexes long or short lately, you're not alone because they've gone absolutely nowhere. If you turn off all the lines here, you can take this grab where we're at today. I'm moving to the left horizontally. I'm going back, and if the pop-up box on the left tells me we're trading today exactly where we were trading over right at 2.5 months ago. So that's the story. We've gone down a little, up a little, down a little, up a little. So the money to be made lately is in individual stocks. While the markets trade around, and you probably read about this, there's been a lot of sector rotation. Tech has been weak lately, and financials have been picking up. There's plenty of opportunities trading a long-short portfolio, long the most bullish stocks, sectors, or even commodities or other instruments. I'll get to treasuries up here in a second. Let's just move on. Let's get away from this because, again, I'm talking about something that's really just grinding around. The VIX, that's not it. I missed the button there. VIX, there it is. The VIX continues to hold support on that uptrend line I've been harping on for a long time now. This is the uptrend line. It comes off the mid-2024 lows right there. And this is where we was last highlighted. We had a divergent low, aka positive or bullish divergence. That divergent low is still the most recent low. And as I mentioned, the VIX will usually start to wake up, perks up, has a little pullback, does a little, and then sometimes, or at least that's been the pattern, after a couple of these little initial spurts, give you about a 70 or so percent rally, then every so often we get the big move up. Whether that's coming or not, I'd say there's a decent chance, but I just don't know if it's going to happen by the end of the year or sometime early next year. It all depends on what the market's doing, key stocks and sectors. I'll get to that in just 1 second. All I can tell you definitively, we're still holding that trend line, and we've had those two. In fact, the last time I gave it to you was down here. We had 100% pop in the VIX, hit that level again, and that's that 2862 level. You can see 2 tags of it. So it goes without saying that is, I had that level before we even got there. I had it back here. It was based on these previous reaction highs, that reaction low, and the fact that we've hit it twice more since then further validates that as a very important and technically significant level. In other words, if we run up to it again and pop it, we're probably going to go up to the next targets right there. And likewise, if the market's going to rally into the first quarter of next year and beyond, maybe into the summer, then you're probably almost certainly going to see the VIX break down and probably come down here to this longer support zone. So never fall in love with it. It's grinding around sideways because the market's grinding around sideways. But we did put in this most recent divergent low. I threw that out to you recently. And we're in this kind of trading range. We need to pop that and to open the door to more upside. So there's the VIX. And again, the VIX is only going to move if the market drops. It's only going to go up, I should say, if the market drops. Semis are a big sector. You have the divergent high that we had here. There was the primary uptrend line break, which was a sell signal in the semis. Had the initial leg down, popped, put in a marginal new and still divergent high. I had it in yellow there because before it even happened, I had that drawn out as a prediction that any new high would be a marginal new and still divergent high and likely fail. And that's exactly what happened. We punched out, made a ever so slight marginal new high, and that high has failed. And it's been pretty impulsive, nothing but red sticks since. Now, not the end of the world because the semis are still not too far off the highs. Currently testing that key 50-day moving average. That's this yellow line right here. Bullish when you're above it, bearish when you're below it. So we need to take that out. And that's coming in with this 292.50-ish price support level. So this is it. The semis are at support. Based on this technical posture, I can tell you with confidence, I believe that the semis have most likely topped. There are no guarantees, but I would expect this to break, then this level, and then the 200s. And again, long-term, I've also given you some long-term targets on the, let's see, I think I have them. Yeah, here we go. That's an old board. Where are they? No. I'll have to mark that chart up. I must be on the daily. I know I've had some targets for you somewhere recently. These are old boards. Okay, I'll mark up some targets. I mean, the chart's annotated. You can see my levels. That's 271.97. So they'll call that 272. That's 254.22. And then that should come in with the 200 exponential and the simple a little bit below it. All right. And again, you have the divergence. And see this bearish PPO crossover, the lines turning down? That means that's a confirmed divergent high. I always say in my book, so I made up what I call unconfirmed or confirmed divergence. And that is when you're going up, the momentum indicators are rising. So I like to see the PPO turn back down and make a bearish crossover, which it's just done to effectively confirm that lower high right there. And it gives us the negative divergence. So that's that. Semis look pretty cooked to me, but plenty of meat on the bone if they have topped, right? Plenty meat on the bone. And of course, you have to kill the 800-pound gorilla. NVIDIA still needs to, at minimum take out the 200-day moving averages. But so far, it has peaked back here as well. Had that little almost an island cluster top right there. And on the weekly chart, just like the equity markets, a big bearish engulfing candle, as I mentioned, put in back on here the week of November 7th. And so far, that bearish engulfing, just like in the NASDAQ 100 and S&P 500, has marked the highs. Okay, and I'm not going to spend the time to go over each and every semi, but I've done this fairly recently, but a lot of them just coming off divergent highs and then triggering sell signals breaking down. Just need to take out the next supports here. I'll just click on the big ones here. That was Broadcom we were just looking at. There's Taiwan Semi, TSM. Again, divergent high, ever so slightly marginal new divergent, still divergent high, followed by a sell signal. And there's support right there. So that's how the semis look. Most of them breaking down, moving lower. AMD just broke the uptrend line recently. So there's a new sell signal, an additional sell signal. Remember, you had a bearish rising wedge. There was your sell signal there. So far, the stock has dropped. Well, from there, it dropped about 25%, and it just triggered a more significant sell signal. Why? Because this is a longer, more significant primary uptrend line. This was a minor uptrend line, a steep little bearish rising wedge that got you in near the top. And so now you big old gap to be backfilled here. So if this stock moves much lower, it's going to enter this gap right here. And that should take you down to the 200-day moving averages for a gap backfill. And that's going to put pressure on the sector because that's AMD, one of the leading chip stocks. Micron, AMAT. I said I wouldn't go through them. It's just hard not to, guys. I'm a chart hound. I love this stuff. I look at this every day. But again, I've already updated this with you within the last week or so. So I'm going to just move on, show you the semis are suffering. And what's held the market up, as I mentioned, is sector rotation. As I've been saying for many, many weeks now, if not months, unless the financials break this 5130-ish support, which is also the key 200-day exponential and simple moving averages. That's the red and blue line there. It's a massive support. To me, a big level that will signal lights out for the financials. And as long as you don't get rotation back into tech at that time. Remember, tech is the largest sector in the S&P 500. Financials are the second largest. Even though they're only half the weighting, tech has the highest weighting. It's still a sector, as I've been saying. You're never going to see a bear market without the financials going down. I can't imagine it. It's if the banks are doing that well, then the economy is doing well, right? And then also it's mathematics that this is the second largest sector in the S&P 500 at about, last I checked, at about a 14% weighting. And so that's it, guys. They held that support, bounced off it. All it's done, we had a divergent high there followed by a breakdown, a sell signal. And just like a lot of those semis I just showed you, all we've done is made a marginal new and still divergent high. The 800-pound gorilla in the sector is JP Morgan. JP Morgan has to still break that 293.78 and then 280. This is the lights out level, 280. You'll have taken, if and when JP Morgan takes out 280, it will have also lost the key 200-day moving averages, both the simple and exponential. You can see they're red and blue, which come in together, and then that will be a kind of all-in moment for the market if the tech sector is still on a sell signal. All right, that's it. We don't need to we could spend time talking about 100 other stocks and sectors, but they don't matter. The tech, financials, and of course the indexes themselves. The VIX is confirming still its support. And again, you have to ask yourself that, the markets, especially the S&P, being not too far off all-time highs, yet look at the VIX, continues to make new highs. And it was doing the same thing here. No, I'm sorry, that was going lower. It was doing the same thing here for a while, making new highs, and you had a lot of big spurts up there. And we're coming off this divergent low, just like that one gave us that big pop finally after a few little fits and starts where it popped up. Let me jump over. I want to do natural gas. I got an update out to you today. All right, so I've been trading natural gas for decades, really. And this move, I always say it's very, very volatile, but this move it's very unusual. I would say it is, I've looked at the headlines, but I've only glanced them. Usually a move like this, you'll see a pullback when the weather changes. In other words, in the winter you get cold snaps. If you get an unusually unseasonably cold front coming through, especially hitting the whole nation, you'll see a spike in natural gas prices quite often. Or sometimes the weather's, we get a blast of warmer air and then demand for natural gas goes down or whatever. This, I haven't seen anything. I've only glanced at headlines. Again, I don't bury myself in fundamentals. I put a much higher weighting into the charts because you can't trade fundamentals. You're trading looking in the rearview mirror. If you're waiting for the weekly inventory reports to come out, again, you're trading in hindsight. By the time they come out, it's going to move so fast you can't get in front of it or get out of it. So what I'm showing you here, what I'm going to tell you, this move reeks almost of market manipulation. Again, I'm sure there's some kind of fundamental headline attached. I don't know of any regulatory changes that would have caused such a sharp drop. But the way I do this, when I see a drop like this, to kind of put it in perspective, this is what I've been wanting to show you here. Let me find a clean board. Here's a clean board. So now I can draw. And what I do is I take, we were well en route. We're coming off that divergent low. Natural gas it was looking as bullish as it has, both price action wise and the charts. Nicest setup I've seen in a while. And then we had this. What this is, so as you can see, I'm taking a trend line here, and I'm putting that trend line on the top of that candle down to today's lows. And what this does, two things. You have an XY axis here. You have both the price drop, and you have the amount of time it took to drop on that x-axis, and then the y-axis. So this is time, because each candlestick is a day. So you can count them this way. It's very easy. 1, 2, 3, 4, 5, 6, 7, 8 trading sessions, not calendar days. 8 trading sessions or trading days. And then you have this drop here, which was unusually large. That's a total drop of almost 30%. And that is, again, in just 8 trading sessions. So now where I'm going with this is when I see such a drop, you can take a line like that. By putting a trend line on the high to lows, you're measuring both the scope of the move, in other words, the percentage drop or gain. I'll do this with a gain. And you're also measuring the duration, or how long it took, by the slope of the line, by how far out it goes down, or how steep the slope is. And you can see there's nothing like it. And I haven't seen, usually drops like this only come in a primary downtrend line or after a very big divergent high, not off a divergent low. Again, this is, Six Sigma event. This is very unusual, extremely unusual. And again, you can take this line, go back as far as you want. And I've done this, and you will not see a drop like that in natural gas. So here's a big drop. And the natural gas from this point, where it was a little consolidation, fell more, but not in that same period of time. It took this long for it to get down there. So I just wanted, for whatever it means, or for whatever it's worth, there's close to it. But again, that came after we were in a big downtrend there. That was just a counter trend rally right there. Either way, one of the biggest drops that I've seen in quite a while. And as I showed you today, it's pretty simple. It's either you take it or leave it if you have this still. Now, look, remember, let's not forget, this was our divergent low right here. We're still coming off a divergent low. We have now taken out, we've kind of called into question, most certainly, this near-term uptrend. An uptrend is defined as a series of higher lows, right, and higher highs. We had all that going. We were rocking, heading into T3. I thought we hit that escape velocity where natural gas will start to move, and then boom, this hard reversal came. And again, I can't explain it. I'm sure it's in there somewhere, fundamental reasons why. All I can tell you definitively is, look, we're still above this low. An uptrend can take other forms if we can reverse soon. And I showed you where I made an objective case for a new entry or an add-on if you're still in it. We're still off that lows, and so maybe this uptrend starts to look something like this, right? And we go on to make higher lows here. I don't know. All I can tell you, when I zoom down to the shorter term charts, this is a 60. You can probably see it on the 15-minute as well. Positive divergence right there on the 15, even on the 60-minute charts. I gave you the futures this morning. That's what I trade, and I know some others on the site like natural gas futures too. There's a nice clean. Look how steep this downtrend is on UNG. And boom, we popped that. That is a bullish falling wedge. There's your positive divergence. Again, this is the 60-minute chart. Remember, you have different price targets I've given you on the daily time frame for a longer term swing or trend trader, which I showed you a second ago. And this is a 60-minute chart. This is for active traders. And these are our targets: 1, 2, 3 hit, 4 hit, 5 hit, almost hit T6. We're still above this last low, bullish falling wedge, and I suspect we're going to see a pretty powerful short covering rally coming up soon. This to me seems like a shakeout move, almost high level. I'll call it manipulate. You can use whatever word you want. I think somebody with a lot of capital that it was able to move natural gas did so, and they're probably going to, I think you'll get a sharp spike up here. And again, I go off the charts. I'm going to show you where the futures are at right now. This is that chart I got out to you this morning. So what you have here, a lot of reaction lows. There's a gap there, another reaction low. So this is a support zone right here we hit. There's your positive AK bullish divergence, especially on the PPO. You almost have it equal lows there on the RSI. There's the wedge. There's your trend line right there. It's the same thing on UNG, but this is again a 120-minute chart. Every candlestick's 2 hours or 120 minutes. And so there are your targets there. And that's the previous low. Natural gas for the last year or so has had a history of going down, undercutting the recent low, and then turning around and rallying. But, if you're holding out for that, maybe you get it. Great. If you do, that could be your entry or add-on. But sometimes you come back and you don't undercut the low before rallying. So all I can tell you definitively, support, positive divergence. Natural gas has come way down, 30% pullback. You're going to at least have a strong snapback rally here soon. So still liking this one from this level right here. And again, you can add once that wedge is clearly taken. All right, what else? Since we're on commodities, let me just hit the grains real quick. They've been stalling out, but corn has been testing that downtrend line. This is corn. You have a primary downtrend line, the corn ETN that tracks corn futures. Very well-defined downtrend line. We keep hitting it, and as I've been saying, corn needs to pop that. We already hit, it's coming off that divergent low back here. We hit that T1 first target. We've hit it a couple times. These are longer-term targets, but you got to take out this trend line, and then you have to take out this T1 level right there. And soybeans also still off their low, just like corn. Hit T3 recently, my third target right here. We hit T1, hit it again, took it out, popped up to T2 and 3, pulling back. Still very much off the lows. There's your uptrend line. If it comes any lower, that would be an objective entry. And then wheat is the kind of sucking wind out of the 3, but they tend to move together. Like I said, if corn and wheat continue up, wheat needs to take out this trend line, and then it will go as well. So just did a reverse split. It looks like 1 to 5. So all my lines got moved. That's what happens on this charting platform where it's the 1 to 5 split. So there's all my old lines right there. So I have to replicate it or redo the trend lines. That's it. So there's wheat. Still big divergence. Just need corn to break out. Wheat will most likely follow, especially if corn and soybeans rise. What else do I have for you? All right. Bonds, TLT. Like I said, we shorted TLT here, hit the final target, which was the first of this, either the first of this uptrend line or this 87.24 price support. So we swung it down, hit the trend line, covered there, and then it hit that price support, which again, when we first shorted, I didn't know which would come in first. If we went down, we would have hit them both at the same time. But it was a good support level, and so look, nothing big, but we had for the opposite reasons of shorting it here, negative divergence and a wedge break. We went long because it had fallen to nice support with positive bullish divergence. And as I mentioned, it's also an indirect hedge if you want. Could work out as an indirect hedge to equity shorts on the stock market, index shorts. All right, just a few random names just to update. Novo, still a long-term swing trade idea. I gave you targets on both the daily chart for active traders, T1 through 5, and then I gave you on the weekly chart two single targets, this downtrend line, or was it, yeah, I think the downtrend line, yeah, and then T2 up here. We hit T1, we pulled back, still positive divergence, but going back to this daily chart here, sorry, I had to pause it there for a second. Back to the daily chart. This is what I'm watching right now. This downtrend line right here. And you have, that gives us this, there's your positive divergence. And that is a bullish falling wedge pattern. So remember, this was long-term support. That was the whole point of taking this stock right here initially and gaming it up. And then told you at the time when we were up here that I wouldn't be surprised and would kind of leaning towards this stock coming down to retest those long-term lows. So that one still looks good from a longer-term perspective. Comcast, I threw out to you back a couple months ago. Got in a little early. I threw this out. I gave you a total of two final targets and a potential third target. I think it was here. We went on. They reported earnings right after I threw it out. We went down, made a divergent, but still a new, but still divergent low. So you have the positive divergences still very much intact, right? Lower lows in prices and higher lows on the indicator, equal or higher lows. And then you did take out the downtrend line recently, this downtrend line. So breakout back test, R1, this is R2. I think I added this level today. The only things, not the only thing, but I believe it's the only line I've added to this chart since then. So this is a new level I put in today. I think, yeah, this one was today, created, yep, December 16th is R2. Created that earlier, and that's so far we're at that level right now. I have the line at 29.22. We're at 22.18. So if we can pop that, runs up here. You have the downtrend line comes right below T1. So you might, if that's your plan to take profits at T1, you might want to take profits a little below, just before that trend line. Then you have the 200-day moving averages. So there's a confluence of resistance there. So you're probably, if we pop it, get a reaction. Ultimately, if it can break that level, we go up to T2. And if it does break that level, that will make this official T3 because that's a powerful breakout. If we can take out the downtrend line and the 200-day moving averages, and I might even add this as a potential T4 up here. Let me just put potential T4 again. And this would entail most likely the market holding up into the beginning of the year. And I'm always open to all possibilities. So it's not my preferred scenario, but I just wanted to update that one for those of you in it or interested in taking it. Visa, I want to do an update there. We shorted Visa here somewhere, hit up my first, second, third, and then fourth targets, had a bounce back off, as is often the case, just like we bounced off T3. Upon the initial tag of each price target, reactions likely. You have taken out or just briefly, if we fail this, I think this on a weekly, my guess is we'll finish the week back below this trend line right here. And so when you take that trend line, if you look at it on a weekly chart, which one was it? Let's see which board am I on here? There's divergent high. Yeah, that's the same one. I'm sorry, I had the same one here. Yeah, right about there. Basically, you're back testing it on the weekly chart. I just had to extend the trend line. It's off these lows. You also have a downtrend line off the highs. You have the 200-day moving averages, which on a weekly chart are your 40 period. And so we're back testing everything. And so this is still a longer term target. And again, nothing's changed on the daily chart. I've given you a total of 6 targets. This is simply a reaction off T4 with a bounce back. If I turn off all the lines, you can see where we're at. We're currently we're back testing the 200-day simple moving average right now. And so these are still the targets. And if that happens, remember, this is one of the big stocks in the financial sector. And this is a tell into the consumer, if nothing else. This is Visa, obviously, already down from the high recently to our recent lows. When we hit T4, it's already dropped 15%. And we have, by just about all metrics, since we shorted it, the stock is clearly in a downtrend, from this point, making lower lows and lower highs. So there's your update on Visa, an objective short entry here on this bounce back to the 200-day moving averages. And airlines, XAL. Let's look at a few airlines. I think these look like nice. Anybody looking for some short trade ideas? I've had probably as many longs, if not more, lately on the site than shorts on individual stocks. I'm trying to type in here XAL. Oh, there it is. XAL is airline index. Let me go to the individual names. Here's Delta. So on Delta, what happened here? I got off my time frames, got wonky. There we go. Okay, so what we have on Delta is a watch, rinse, repeat scenario. Divergent high, divergent high, divergent high, divergent high. Here's a stock in a larger uptrend since this divergent low. But every now and then, you get ahead of yourself. Momentum starts to wane. That's what divergence is all about, using the momentum indicators to help identify possible trend changes, be they bullish or bearish, and then you get your corrections. So there it is. Boom, boom, boom. That was a divergent low. I don't have it labeled, but divergence down here. And that's it. So, and remember, as I often say, if you're new to the site, I will say what I repeat all the time. Divergences, whether they're bullish or bearish, in other words, negative or positive, are not buy and sell signals. Just like overbought and oversold are not buy and sell signals. They are conditions. They are conditions that typically precede a trend change or a counter trend move. And that's what we have here. So you have your overbought. This is your RSI over here. You're above 70 on the RSI. Last time you were overbought was right here. Stock peaked out, had to correct. Then before that, right here, even in an uptrend. And right here, again, without any exceptions, you get overbought, the stock is ahead of itself. So at minimum, you're looking for a correction here. So there's Delta. But as I say, a sell signal comes on a break of support. There's the trend line. I marked these up earlier today. They weren't broken then. Now they are. So this one is, as I'm speaking, an actionable trade idea. You can short Delta here with the stop. There's a minimum target. That's going to be a drop of about 12.5% to my minimum target. Next target, if you want to hold out for a little bit more, which I could easily see happening, the 200-day moving averages. This could also prove to be a more major top as well. So a lot of strategies. You know, they say there's, many ways to skin a cat, or whatever that expression is. Well, there's many ways to trade a stock. You know, you can either set a stop, let it ride if you're holding out for longer gains, periodically lower your stops. You can take profits along the way at the areas you're likely to get a bounce. Like I said, if this, at minimum, we go down here, most likely get a reaction at that first target. If and when that breaks, we go down to the next ones, take out the 200s, and then bigger things are probably going to happen. In other words, more downside. Let me just rifle through the rest of them. This is UAL, United. There's your little trend line. That is, although not marked, that's a divergent high, just like that was a divergent high, just like that was a divergent high. This was really DH1, first one, and then we made a marginal new and still divergent high, just like those semis I showed you earlier and a lot of other things. So that would take us down. And, the history is these airlines tend to have some pretty big trend changes once they correct. So you can see all divergent high, drop, divergent high, drop. Okay, enough. I think the point's been drilled in pretty good. This is Southwest Airlines. LUV is the ticker. You had a primary downtrend line here, was taken out. But let's just focus in on what's happening right now. You have a parabolic trend line. And as I often say, parabolic trend lines rarely end well. They usually end in a move that's just as powerful as that leading up to the top. So, and this would be my target right here, minimum target. 35, just over the 35.13 area. Remember, always cover a little bit above support in case the sellers step or the buyers step in early. If so, that's going to be about almost a 20% drop in Southwest. Ryanair, divergent high, again, just like here. These charts are all looking there. That was a divergent high too. And there was your little sell signal came on the trend line break, the wedge. I'll get my tool here. Let's see. There was a wedge, divergent high, correction. Extension of the same divergences. They're even bigger now, which indicates to me an even bigger correction coming. Just like that little wedge with that divergent high, there was your sell signal. If you shorted it, you made, or well, assuming you rode it to the bottom, 35%. Divergent high there, dropped 23%. All right, guys, that's about it. This is AAL, American Airlines. There's the trend line. I have to tighten it up a little. Break of that trend line is going to take us back to minimum $14 minimum. Most likely, at least this uptrend line. That one's gone. Alaska Air. I need to just tighten that trend line up. SkyWest, CPA. That's Copa Holdings. Already broke down from its wedge. Hit my first target bounce. I've had this line here since 2013. It's an old line that's acted as support and resistance on this. You can see I haven't modified it since last updated December 5th, 2013. That's how long ago that was been. And they bought it right there, and that was also the 200-day simple moving average. Bounced back to resistance, which was also an old trend line I had here from 2013 as well. It's just amazing how well these lines carried forward from 2013. You're talking, what was that, over 12 years ago. And these lines are just coming in, and what it is, man, machine alike see these levels, meaning algorithmic trading programs, things like that, and people. And so that's it. Bounce back to that level, give you an objective reshort. It's objective reshort again here at that level. That's resistance. Remember, what's resistance here? Resistance. We broke it, and then the breakout failed. And so that would take you down. We already hit this target, so next time around it probably breaks it. JetBlue, I wouldn't. It's one of the better looking ones. Just broke out of the downtrend line, but also struggling with the 200 days. This is the 200 days were lost right here. Back-tested, rejected, currently back-testing. All right, that's enough. Let me just move on. Now, let me wrap the video up. Let me get it out to you guys. This is the last one, ALGT, Allegiant. Needs to break this trend line in this little minor price support level. Let me put that right here because that's a better fit for that. Either way. All right, guys, I'm going to wrap up, get the video out to you. This has been Randy Finney with Right Side of the Chart. I'll be in and out of my desk this week. If you have any questions, want a chart update, whether it's a trade idea on the site or anything you're looking at, feel free to put it in the comment section. Try to do it on one of the most recent posts. I'll usually go back 2-3 posts. If it's later than that and I've missed it, just repost it again under one of the newer posts, and I'll get back to you as soon as possible.